How's it going, fellow traders? Magic Trader here, and this is the CFTC report for April 30th, 2019. These were the positions recorded by the institutions as of this date. And let's begin with taking a look at gold to see what the institutions have been up to in terms of their positions. All right. So we can see that since March of 26, there's been a big decline in long positions, right? Taking profits on longs up in supply, which is what we were expecting. And then they started to increase longs until this week's number right here. A drop from 139,000 to 111,000 positions. So why the big drop in short positions? Well, we can see that that big drop in short positions came with this big push upwards. So what does that tell us? Well, there's a trend line here. So we were expecting some upward pressure from that trend line. The good news is that this is not buying from institutions, which they would typically do if they wanted to push price upwards like this. They would be buying at that trend line along with the retail. Instead, retail was buying, and if the retail's buying, somebody has to be selling, right? Retail's buying, somebody's got to be selling. So institutions are selling positions to them and at the same time closing their short positions that they start to accumulate up here. So that's some profit taking, all right? So closing shorts will cause price to go up, which is a good thing if you want to lure in retail traders, okay? But remember, it's not aligned. They're not aligned with what the retail traders are thinking is going to happen with gold. They are doing something on the opposite side, okay? They are closing short positions, which causes price to go up, as opposed to opening long positions, which causes price to go up. All right? So, very tricky, but it makes sense when you think of it in this way. Price is pushing upwards, but it was caused by them closing short positions. Yes, if you look, net positions pops back up to negative or positive 37 to positive 66, but that's okay. Things will take time for them to play out. And so far, I'm still seeing that we're going to see a bigger move downwards like that. So we'll wait and see what happens. Next, we have the US dollar. And we can see an increase in longs from 49,000 to 51,000 and also an increase in shorts. Bottom line is net positions go up just a tad, and that was as price was rallying upwards. Still thinking that this is going to push up even higher based on what we've collected from the data so far. And then we have Aussie. We see an increase in longs, but take a look here. Big increase in shorts, 79 to 89,000. And that comes as we got this drop, the fake out to the upside, which I detailed in the EURUSD report, only to reverse it and cause it to go down, expecting more downside like this to come on the Aussie. Now we have the USDCAD. We see longs being closed as well as shorts, which ends up dropping short exposure and increasing long exposure from 75 to 77. So a little bit confusing when you look at this. But you see exposure is increasing even though net positions are decreasing. So still expecting price to do that. Now we go over to the US Swiss franc. We see an increase in longs. Beautiful. This is what we've been expecting, but they also increase shorts. No biggie. Bottom line is long exposure drops from 83 to 79, which is healthy, and we get an increase in net positions. So up we go. Then we have the Euro US dollar, and we can see longs increase from 148 to 153 and shorts increased from 253 to 259. So this looks to me like they are wanting to take advantage of the drop that is coming, but they're also preparing for a potential move upwards, and we know where that's going to come from. We take a look here, still in the 63 range, and we still got a massive negative 105,000 in net positions. So still looking good. Then we got the pound. We see a slight decrease in longs. Shorts do nothing. Short exposure increases by 1 point, which is nothing, and slight increase in net positions as price reacts from the demand zone that we have here. So very much neutral bias when you take a look at this. Therefore, not good to trade at this time. US dollar, Japanese yen, long still very aggressive. Shorts very cooled off. 85% jump up from in long exposure from 81 to 85%. Aggressive territory. We could start getting some profit taking here, and we're seeing some push to the downside here. So this can even continue lower. We're watching for that to take place in the community, and if so, we will be exiting our long positions and waiting for the next opportunity. So watching this one closely for that. And the Kiwi dollar, slight decline in long, slight increase in shorts, actually quite significant one from 26,000 to 30,000. That pushes short exposure up to 62%. When we were up here, we were expecting this, and that's what we got. And we are also expecting this on the higher time frames. Net positions up, negative 5,000 to negative 11,000. Looking great for that bigger push to the downside. Last but not least, we got oil. Oil slightly declined in longs, increased in shorts from 97 to 114. That came after supply was hit. So they closed some long positions for profits and added shorts, which is exactly what we've been expecting and saying over and over again every week in terms of what we were expecting with oil and the positions of the institutions. So looking really good. Long exposure drops from 87% to 85%, and we see a slight decline in that position. So far everything's looking good for that bigger drop that we are expecting. And there you have it, ladies and gents. That's the CFTC data that was reported for April 30th, 2019. Hope you find some use of this video, and if you have any questions, shoot me an email, or you can visit www.whiteoakfx.com for more information. Thanks. Have yourself a good one. Take care.